Hello everyone. This is the pre-market report video for today, 2nd Jan 2025 for the Indian stock market in terms of Nifty and Bank Nifty. First, quickly let's see what happened yesterday. Due to the negative global cues, Nifty opened with negative bias, but after 2 hours, roughly same time, some auto company released their December month auto sales data, which was very good. I think that turned the momentum. In addition, day before yesterday, Tuesday evening, RBI released the whole December month credit growth data, which also was decent, near 12%. I mean, compared to a year ago, it was lower, but compared to recent last few months, it improved to 12% from around 10%, which in turn both made the Nifty to snap its 3-session losing streak and closed positive. Regarding the auto sales data, specifically Maruti Suzuki said their sales to dealers increased by 30% and M&M said their vehicle sales increased 18% and there was a strong demand for SUV. So both the stocks increased about 2%. Sector-wise, auto is the top positive sector, increased 1.3% and overall 11 out of 13 major sectors increased, and on the other hand, only realty was the major dragger. Metals were down marginally. Overall, 67% of the stocks increased while 31% decreased. So we can say yesterday Indian market had some relief rally. However, in the cash market for the 12th straight session, FII was net sellers. Yesterday they net sold for near 1800 crore rupees. On the other hand, DIs net bought the stocks worth approximately 1700 crore rupees. In line with cash market, in the derivative market, in the future index also, FII is still maintaining the negative stance as they are having 86% open interest on the short position. And in the option market, 4.7% more their open interest wants the market to go down than to go up. Then the situation for proprietary traders not so different. In the future index, from 56% short position, they increased it to 58%. And in the option market, still 3.2% more their open interest wants the market to go down than to go up. Considering all, both open interest data suggesting both proprietary traders and FII makes more money if the market closed flat or down. So these were the quick takeaway from yesterday's Indian market. And last night there was no US market and European market was also closed. Both are set to open today. Other than that, yesterday in the aftermarket hours, because of the recent rupee significant drop against US dollar, Citi Research Group increased all major company IT stocks target price. First, for Infosys, they maintained the neutral stance but increased the price target to 2035 rupees from earlier 1965 rupees. Similarly, for Wipro and TCS, they retained the sell rating, but on the positive side, they increased the target price. For Wipro to 280 rupees per share from earlier 250 rupees per share, and for TCS, marginal increase to 3950 rupees per share from earlier 3935 rupees per share. In addition to this, they said in the very much favorable condition scenario, if the rupee value dropped to 87.5 rupees per US dollar, then all those stocks got the potential upside of further above 15%. Which looks possible and favorable for me. So we can expect the IT stocks to be on focus today. I mean, today is weekly expiry. At least if not today, I think in the short term, this depreciation of rupee will have a positive effect on the IT stocks. Second, info for banks. We know Jefferies is one of the very important big foreign investment who do lot of investment in India. So their word carries lot of weightage. Yesterday early morning, they released their statement that in their Asia ex-Japan portfolio, they now introduced the HDFC Bank with 4% weightage, and those 4% they took each percentage from Macrotech Developers, L&T, ICICI Bank and Axis Bank. So those 4 stocks lost fund to go in favor of HDFC Bank. I mean, as I said, they released this early morning yesterday itself, but I don't think market reacted for this, but either way, worth to know the info. Then stock-wise, NMDC iron ore production increased by 5.1%, but their December month sales dropped by near 7%, so we can expect market to react for it. Economy-wise, December month GST collection increased by 7.3% compared to a year ago to 1.77 lakh crore rupees, which was lower than all-time high last April value, but as we discussed, it increased compared to 2023 December, which is good. However, I won't say it's positive, rather it's a neutral data. Anyway, now coming to very interesting information, which in the last 2 months, lot of people asked me this same question. What is the impact of SEBI's rule change in the option market trade volume? If required, please pause and have a look. I found this on the Money Control website. I think the graph scale is wrong by 100 units in the y-axis. Basically, in September 2024, option daily turnover reached the maximum of near 600 trillion rupees per day, otherwise 60 lakh crore rupees per day. That in November month dropped to 442 trillion rupees, and then December month it further reduced by around 35% and dropped to 280 trillion rupees, which was roughly half the amount compared to the peak option daily turnover. Even if we compare it with December 2023, the turnover was near 400 trillion rupees. Now December 2024 it was 280 trillion rupees, so very significant drop. I think in January month we can expect a further reduction in the turnover. So whatever SEBI is trying to do is working. As a summary, no US market and European market, hence global momentum is paused with negative bias. But there are new positive information like Citibank IT stocks target increase. Then at present, GIFT Nifty also increased to 23,885. Equating that with the spot market, it's an indication of flat to positive opening. And the US future market opened mild positive now. However, as we discussed in the option participant-wise open interest volume analysis, both FII and proprietary traders makes more money if market goes down, which is a bit of concern. Moving on, yesterday as per stock open interest, Indian Bank, RBL Bank, DMart, Paytm and Can Finance Home got an increase in open interest along with a negative close, indicates the short build-up. On the other hand, IRB, ICICI Prudential Life Insurance, Manappuram, Bank of India, Muthoot Finance and KPIT Tech got an increase in open interest with a positive price close, which means these stocks got the long build-up. About the things to look out, early morning before our market opening, Chinese manufacturing PMI data is due to release. Then during our market time at 2:30 PM, Europe's and UK manufacturing PMI data is scheduled to release. Finally, in the night for US, weekly jobs data, crude oil inventories and their manufacturing PMI data are some of the things we need to keep an eye out today. Coming to technical, Nifty opened gap down and dropped to around 23,550. However, after the first 2 hours, it had a sharp recovery and closed above the 200-day exponential moving average 23,700. Thus, on the daily chart, Nifty formed a bullish candlestick pattern with a higher high, higher low formation after a long time. On the negative note, it remained below the 200-day simple moving average 23,880, which is crucial for further upward momentum. In addition, as usual, it is still trading below 10, 20, 50 and 100-day exponential moving average with RSI and MACD momentum indicators showing a negative bias. If Nifty sustains above 23,700, the first target would be 23,900 followed by 24,000, a key resistance zone. However, failure to maintain levels above 23,700, it could pull Nifty down towards 23,600 to 23,500 range. So overall, it is expected to trade within 23,500 to 24,000 range. Then for Bank Nifty, it opened 20 points lower, but it recovered those losses and managed to close above 51,000, and on the major positive side, which is above both 200-day exponential moving average and 200-day simple moving average. Thus, on the daily chart, Bank Nifty formed a bullish candlestick pattern with long upper and lower shadow resembling a high wave-like candlestick formation, indicating some level of volatility. But it held above an upward sloping support trend line, which is a positive. On the negative note, it continued to trade below 10, 20, 50 and 100-day exponential moving average and remained in the lower band of the Bollinger Band, indicating short-term weakness. Until Bank Nifty moves above 15,350 zone, I think we can't say it is out of the woods. Downside support expect to be at 50,500, then 50,250 level. Then on the upside, resistance is at 15,350, then 15,650. Regarding the options front, the maximum call option open interest was at 24,500 strike, followed by 24,300 and 24,100, with maximum new call option rating at 24,100 strike, then 24,600 and 24,000 24,050. On the put side, the maximum open interest was at 23,000 strike, followed by 23,200 and 23,500, with maximum new put option rating at 23,200 strike, followed by 23,700 and 23,000. Thus, from options data, the short-term trading range for Nifty is expected to be at 23,500 to 24,100. So that's all in this video. Hope you all got some information. Please consider subscribing the channel and liking the video so that it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.